Good evening, guys. This is Simon with Trade and Perform Coaching. I am doing really a trade review on the basics of using the zones. It's been a while since I've done one of these, and I think it's a good time to kind of bring it up for two reasons. Number one, it's really grindy and slow. We're in the middle of summer, and grindy and slow can be tough for a lot of day traders. So those who aren't familiar, my entire focus is on day trading, and there's two ends to that day trading, both entry and exit and targets. The problem is it's so slow, so grindy that it can be difficult. So let's get started. Before I get started, just a quick notification. Past performance is not indicative of future results. This is for educational purposes only, and you can lose a lot of money trading futures if you don't know what you're doing. Importantly, I'm sharing my trade plan with you in hopes that it makes you a better trader, but I am nobody's guru. I trade primarily for myself, and I try to help others along the way. However, my trading style isn't for everyone, right? And I don't believe trading is easy. I don't believe day trading is easy, actually, unlike where you'll hear a lot of people say it's easy. It's not. It actually requires time, effort, and dedication to get right. So in that vein, let's start off with some basic concepts. Every day I post up charts, usually on StockTwits and Twitter, certainly to my room, where I'll post the basic support resistance zones, and I'll kind of give you an idea here. Within the Slack channel, you'll see that in the morning or in the evening, one of the two, I'll go in and I'll post the ES trade, the CL key levels, and the GC key levels. Right. So the key thing about that is those are the areas where we're looking for support, right? And it kind of starts the basis for the thought process. Now, there's two things to remember. When the market's moving fast and it's moving up and down with ease, the support resistance levels are still key to use as targets and as trade setups. However, it's relatively easy to set up trades outside of those locations and still make money. When it gets slow and grindy, it becomes very, very hard to make money. So we're going to start with the GC concept. So number one, I want to cover the different types of zones so that everyone's clear. Okay, and I think I've got a version of all of these somewhere on here. There we go. So you can see I've pretty much plotted out above and below. So a zone covers a yellow zone. You'll see here I highlight it with gray. The top of the zone and the bottom of the zone, if you're coming from underneath, or inverse, if it's coming from above, this is the top and this is the bottom. And I expect, I'm looking for two things at the zones, or actually three things. Number one, the zones make great trade. So before I cover that, everything else in the zone, the green is simply prior days high and low. Red areas and red dashed areas are critical swing areas, right? But not support and resistance areas. They're areas where I might look for traps, or they give me an idea of where, with a quick glance of the chart, where the most recent swing high is or where the most recent swing low is, so I get an idea. In addition, right, all charts and all, if I can find this, okay, all charts begin with some version of TPO profile and volume profile. I use both. I use volume profile and TPO. I'm a big fan of Dalton Mind Over Market. I have absolutely nothing negative to say about them. It just takes time to learn this, and I've gotten very good over the 20 plus years that I've been doing this at figuring out which areas will be key support and resistance areas and which ones will be weak. So almost all my support and resistance areas come off of volume profile and TPO profile. Okay, so that being said, what you end up with off the TPO, this is gold, is key support and resistance areas. And what you'll see is, I don't always obviously get the turning points. That wouldn't even be remotely reasonable to think that I could, right? All I can do is use the information that the profile's giving me. However, you see a great example here, and you'll see in the morning when I post the charts, I'll say the yellow zones and the white zones are key areas, and I use them both as targets and as key trade locations, right? And remember, I'm a day trader. Let's think about what that means for a moment. What I'm looking for is not to trade a lot, but for key opportunities with key setups, right? And remember, these charts, the 5-minute charts, are a beginning place, not an ending place for me. Key areas to both target and key areas to look for trade setups. And what you will see is what normally happens, which is we get into you'll see this morning 935, right? We extended up overnight in gold. Right, you see we extended up. The blue area is the zone. It's generally the prior day's point of control. I don't like trading there. The reason why I don't like trading there is because it tends to be very, very choppy. As you can see here, we finally get up out of that point of control, extend up, get exhausted, right? And after that exhaustion, we roll back down. And notice, if you can figure out, and I'm going to erase these profiles. Hold on, give me just 1 second. There we go. If you'll notice, if you were able to manage to get a short up here at this 1410, 1411 area, what are you targeting? First, the prior day's point of control and TPO point of control, but it's a blue area. It tends to be very choppy, and it can get relatively easily traded through. So the general idea is if you would have managed to be able to find a way to get a trade up here, and again, using my indicators, delta, momentum, and my algorithms, even if I'm not in a key location, I can often find a way to get a trade. But more importantly, when I say that I use the yellow zones both as targets and as key trade locations, you'll see two things happen here. Even if you didn't or were not able to grab the short from on top, right, what you will find is, look right when we get into the anomaly, the yellow zone, right, what you will see is that that zone ranged from 13, wow, we can barely see that, so I'm going to scoot this over a little bit, from 1398 basically to 1397. 10 ticks of risk, $100 a contract, and look at the counter rotation that you get. Out of that 1398, it rotates all the way up to 1401. Why is that important? Because when you have key trade location, and you can put on risk at that key trade location, it gives you the opportunity to do what? Be able to pull out $200 or $300 out of a contract. Sure, it'd be nice to get the 1407 down to the 1398, but this serves as a key area. Now I want to show you something else. There's another piece, and oftentimes what will happen is when you get underneath these zones and they don't break down, right? So this is an attempt to break to the downside underneath this 1396. See when it recovers back above and makes an impulse move, right? So now you have an under, you have an over. The backside test is usually good for a trade, and what you will notice is that becomes a 50-60 back. And this is also an attempted spring. See how you had a low, you broke the low, you trap back in, you backside test, right? And there's another opportunity to take the trade from 1398 almost back to 1400, right? So, and that's one way. And then you'll see the second time that it broke underneath that zone, that's when it finally, you'll see here in Asia, we finally broke down at the end of the day, backside tested in Asia, that same key location, and down we rolled, right? So those zones, those yellow zones, and incorporating them into the room are very, very important for key trade location and areas to establish trades. So that's one example, right? That was gold today. This is today's ES chart, right? Same concept, same 5 minutes. Let's make sure we get back on today's date. There we go. And what you will see today is consistently, right? So the first 30 minutes are the most difficult in ES. I have not been trading ES a bunch, mostly because GC and CL have been trading extremely well, right? But you can see again, when we came in initially, so this is the open, right? So I don't consider the overnight. I consider everything brand new as soon as the market opens, right here at 8:30. And the first 30 minutes are the most difficult. So we open up, they try to push below that zone, backside test right into the 9 o'clock hour. Algos drive it just over, right? So you don't get an initial rejection out of ES, and each market has a little bit different characteristic. ES is a little bit different than GC. It's little bit different than CL, but the principles underlying the idea are the same. So here we get above. You'll see that we push back underneath, so we have an over, under, backside test, rejection, comes back in for another area, backside test, rejection, right? And then you'll see one more time they come back in for backside test, rejection. Remember, I post all these charts before the market opens or in the evening time to members in the room. And so they give you very, very key areas, both to target for a location to exit a trade and for setups for entry of a trade. And you'll see later this evening, as that day rolled over, we finally made it down into that 28.69 to 28.66 area, and it responded back up. The idea of these zones is not that they're tick perfect. The idea is that they're giving you areas to look for opportunities to put on risk, get long, and hopefully give you enough rotation to exit your initial risk, right? And then hopefully target, when the market's healthy, target zone to zone, right? Just like we move zone to zone here. The problem that we're having currently is it's summertime, and it's just super slow. Normally you would expect to move from here to here before the market would close. Like if we hit it at 14.15, you would expect by 1500, right at the close, that we would have moved down into that zone. Instead, it takes all of Asia to get that part done, right? So that's another example of using the zones both as targeting locations for exit of a trade and for looking for trade location to enter a trade, right? And there's two methods. The initial touch of the zone, where you would expect normally an immediate response, and then your over-under, where you get the backside test of that location, tends to provide an excellent continuation trade back in the opposite direction that we moved from originally. Let me make sure everyone understands what I mean by that. What I mean by that is you come in, and this threw us for a little bit of a loop because of the first 30 minutes. But again, normally you'd expect to push in and a push out the first time, but the alternative to that is push in and over, gets back below, backside test, and that backside test provides a trade to the downside, right? The one thing I do want to emphasize, the slow pace for a lot of traders, not all traders, but for a lot of traders, myself included, really caused me to stutter step. And the reason why is I normally expect a fast response out of these areas, and instead you have to give these a little bit more room during the summertime, and you have to have a lot of patience, and that's just not everyone's cup of tea. Just the fact of the matter. Just not everyone's cup of tea. It makes trading just a little bit harder. When it's very slow and grindy, and you just have to have a lot of patience to let it hit your target. And a great example of this is, let's say you established almost perfectly in this location, right? All the way here at 9 o'clock, and you thought, hey, I'm going to make it from here, right? Got an over under. I've got a 50-60 retrace here for my entry, which I never disagree with. And you're like, hey, I'm going to take it from here all the way over to here. It's a great plan, right? You're like, hey, I got 29.80. My target down is 28.69. That's approximately a 11-point trade, right? And it was a good idea, except look how long it took you to get to that location. I'm going to show you something. When there's a little more volatility in ES, right, what you get is during the day session, right, is you tend to get quicker. That's still summertime, but this is a good example. Ignore the zones, right? But what you tend to get during the US session is bigger, quicker extensions, both to the downside. Notice that we cover this 29.64 to 29.40, 24 points, and we cover that in basically 2 hours. And then in the next 2 hours, we go from 29.36 all the way up to 29.64, almost 25 points, right? And it does it again within a 2-hour period. Now that's getting stretched out to a 10-hour period, right? And that's the difference between summertime trading, where you have to be extremely patient, not my strong suit, and normal middle of the year, nice fast-paced trading. And as we grind into August, that'll only probably get a little bit more challenging. Right. So now let's go look at our last piece, and that will be, let's see, I think we covered GC. I think all we need here is CL. And CL actually had good rotations today. So here's CL here at the open. So remember, pit session opens on CL 8 a.m. Right. So once again, see the yellow zone over here? You can use it as a target, and it pushes right into the target. Again, because there's fewer traders participating in the summertime, we tend to overshoot just a little bit. But you'll see the same pattern take place here. Up into the anomaly, right? Again, this is all out of Dalton's. I didn't invent this. What I did do is put together the packages and the patterns that I look to trade out of these locations so that I can make money. So, into the anomaly, underneath the anomaly. Notice this takes time, right? This all starts at 8 o'clock and takes all the way till 10 o'clock to play out. Backside test of the anomaly, and then push to the downside. There's let's see, this is prior days, this is Friday session high, right? We find response, we get a little response back up, right? And then you finally get, in Asia, a push and attempt to come back and retest that anomaly. And that anomaly should actually act as support if we can get into it. You'll see they almost hit it right to the tick, right over here at 1:20 in the morning. It is 3:30. I fell asleep early, so I'm up working in the middle of the night. But you can see how the zones really act as great magnets for targets up, right? And as great trade locations if you'll let the trade develop and you'll build around that area for both position trades for swings in the opposite direction, right? Or scalp setups, depending on your trading style. Anyways, my name is Simon. I coach individual traders and help them come along from basically losing traders or boom bust traders to consistent profitable traders day in, day out. I run a small boutique room. I'm not a guru, and I do some one-on-one coaching with clients to help them improve their trading. If you'd like to come visit us or you'd like to check out the room, just send me an email. The email is TRADENPERFORM@gmail.com. TRADENPERFORM@gmail.com. If you'd like a 5-day pass to the room, send me an email. I'll be happy to extend that to you. And no matter what you're doing, right, have a process, right? A process, not an idea, a process and a plan to execute that process day in, day out, and a way to read the market, right? And generally, I suggest not trading multiple markets, but focusing on 1 or 2 markets, right, and getting really, really good at learning those markets. Remember, these zones are a beginning point for us, not an ending point, but they give us a really strong area to start to understand what kind of trading should be going on in those locations. Anyways, I hope everyone has a great trading day today and learns to trade well. I am posting these levels up for ES and CL on StockTwits and Twitter. I'll be doing that well, for as long as I feel like it. And obviously I post them in the room to the members every single day. So I hope everyone has a great day, and we will talk to you later. Have a good night.